Britain is still on course to bolster the Kremlin's coffers with £2 billion a year for imported Russian liquefied natural gas as Brent crude oil today topped $119 per barrel, is now up almost 20% on the week and is expected to rise even higher because of the war in Ukraine. UK imports of Russian gas have doubled since 2018, and despite a ban on Russian-owned ships docking in British ports, two carrying it are due to arrive at the Isle of Grain in Kent this weekend, according to Unison. Russia supplies around 30% of Europe's gas and oil and 1 in 10 barrels of the world's oil, and the UK has become increasingly reliant on it. Around 33 shipments from Russia arrive in the UK per year, mostly from the Yamal Peninsula in the Arctic Circle. But it appears that there has been a change in tactic, with fuel changed onto non-Russian ships in Europe before continuing their journey to avoid sanctions. Alex Froley, an analyst at ICIS, said, "If Russian-controlled ships can still land in continental Europe, companies may be able to swap schedules around to avoid a significant change in overall supplies to Europe." Labour MP Darren Jones, chairman of the Commons Business and Energy Select Committee, told The Times, "Ministers must urgently map our exposure to Russian energy and then set out what action will be taken to reduce that exposure to zero. We should do this in partnership with European allies and collaborate on a Europe-wide resilience package that cuts off Russian energy dependence as quickly as possible." Globally, Brent crude topped $119 per barrel and is now up 20% on the week, while everything from coal to natural gas and aluminium are on fire as Western nations tighten sanctions on Russia. The rising cost of buying oil and gas is good news for Putin, as it was revealed the West is still paying Russia more than $1 billion a day for fossil fuels, an amount that is only going to rise, analysts predict. Russia can use this daily cash injection to subsidize the $15 billion a day invasion of Ukraine as his troops remain bogged down after hitting fierce resistance from Volodymyr Zelensky's heroes. The National Grid grain LNG site in Grain, Kent, where unions say 2 ships containing Russian gas will arrive this weekend. Oil reached $119 per barrel today as the war panicked the markets about a lack of supply. The ruble continues to tank, hitting a record low against the dollar yesterday evening, rallying slightly before dropping again today. LNG tanker ship Arctic Discoverer seen arriving at the National Grid's grain facility in Kent last month. The Bovinenkovo gas field on the Yamal Peninsula in the Arctic Circle, the source of liquid natural gas Britain pays billions for each year. Russia supplies around 30% of Europe's gas and oil imports and accounts for around 11% of world oil production, said Shane Oliver, head of investment strategy at fund manager AMP. In short, investors are worried about a stagflationary shock. Russia's invasion of Ukraine has catapulted the price of gas and oil upwards to record levels, with British households warned that they could soon be paying more than £3,000 a year to heat their homes. Yesterday, UK wholesale gas prices, the price paid by energy companies, briefly topped £4.50 per therm, up from £2.50 yesterday morning. It then settled at around £4, more than 10 times the level a year ago when it was around 35p. Britain imports around 4% of our gas from Russia in liquid form. Market analysts say that the spike is in part due to uncertainty caused by the government's decision to ban Russian ships from UK ports. Experts say that if it remains at this price, household gas bills for millions of Britons already squeezed by the cost of living crisis will be in excess of £280 a month or through £3,000 a year by the autumn. The government's price cap will go up by £693 on April 1 to £1,970, but analysts from Cornwall Insight are forecasting an autumn price cap at £2,497 a year versus a further rise of £500 in October, even before today's record price. Joe Malinowski, founder of the Energy Shop, has said, "Depending upon how the situation unfolds, gas prices could literally go anywhere. We are not as reliant on Russia for security of gas supply as Europe, but the price we pay is linked to gas prices on the continent. The best we can hope for is that wholesale gas prices don't go up much more. All other scenarios are varying degrees of bad." The cost of a barrel of oil briefly hit $1.13 a barrel today before settling at $111 this morning, the highest price for more than 7 years that is expected to force the price of petrol and diesel over £2 a litre. Fuel prices have hit a new record high as the cost of oil soars due to Russia's invasion of Ukraine. Figures show the average cost of a litre of petrol at UK forecourts was 151.67p on Tuesday, up from 151.16p on Monday. Meanwhile, the average cost of a litre of diesel is also at a record high, reaching 155.23p, according to data firm Experian Catalyst. It means an average 55-litre petrol tank, used in cars such as a Ford Focus or VW Golf, will now cost £83 to fill up. Motoring groups fear prices could increase further, with some even warning of 180p litre prices within months. RAC fuel spokesman Simon Williams warned the sudden $10 £7.50 jump in the oil price on Tuesday to $113 £85 a barrel is likely to take the average price of petrol towards 155p a litre and diesel to 160p, particularly as it's looking like this price isn't just a market blip caused by the US and allies deciding to dip into the strategic oil reserve. If oil does stay at this level, the journey to an average unleaded price of 155p may be far too quick. Gas prices peaked last year and are flying upwards again with Putin's hand on Europe's gas and oil pumps. One therm did reach for 50p today, more than 10 times the level a year ago. The M74 Hamilton Services is South Lanarkshire is where fuel prices are now at 176.9p per litre for diesel. Fuel price hits another new record. The cost of a litre of petrol soars to 151.67p after Ukraine invasion, meaning it now takes £83 to fill up. The average family car fuel prices have hit a new record high as the cost of oil soars due to Russia's invasion of Ukraine. Pictured, fuel prices displayed at an Esso petrol station near Kettering in Northamptonshire. Fuel prices have hit a new record high as the cost of oil soars due to Russia's invasion of Ukraine. Figures show the average cost of a litre of petrol at UK forecourts was 151.67p on Tuesday, up from 151.16p on Monday. Meanwhile, the average cost of a litre of diesel is also at a record high, reaching 155.23p, according to data firm Experian Catalyst. It means an average 55-litre petrol tank, used in cars such as a Ford Focus or VW Golf, will now cost £83 to fill up. Motoring groups fear prices could increase further, with some even warning of 180p litre prices within months. RAC fuel spokesman Simon Williams warned the sudden $10 £7.50 jump in the oil price on Tuesday to $113 £85 a barrel is likely to take the average price of petrol towards 155p a litre and diesel to 160p, particularly as it's looking like this price isn't just a market blip caused by the US and allies deciding to dip into the strategic oil reserve. If oil does stay at this level, the journey to an average unleaded price of 155p may be far too quick. Millions of households have this week received details of eye-watering energy bill hikes as suppliers prepare to raise charges next month. Experts are urging customers to keep an eye out for competitive fixed deals amid fears the Russian invasion of Ukraine could drive prices higher. Last month, energy watchdog Ofgem revealed plans to hike its price cap by 54% for 22 million families on standard tariffs from April 1st. This will push up the cost of the average household bill by £693 to £1,977 a year. But emails and letters detailing exactly how much more customers will have to pay are arriving thick and fast. Amber Shalema, 39, discovered last Thursday that her monthly bills will rise from £181 to £250, an extra £790 a year. Russia and Ukraine export more than a quarter of world wheat and 80% of sunflower seeds, used for cooking oil. Analysts Capital Economics said, most of these exports leave from Black Sea ports, at the heart of where conflict might occur. Fighting could also wreck crops, and it is estimated that rising agricultural prices would add 0.2 to 0.4 percentage points to the rise in the cost of living, which is already expected to hit 7.25% in April. Savings and pensions will also suffer. After the invasion, £89.7 billion was wiped off stocks in London as the FTSE 100 index of Britain's biggest companies fell,